Have you ever wondered how the interest rates offered on loans affect your house payment? Let's talk about it. If you've ever wondered how interest rates affect your house payment, just think about this. For every 1% more you pay in interest on your home, depending on the price of your home, it can cost you $300 to $600 a month. So for example, if we take a $500,000 home that you put 20% down on, so now you have a $400,000 mortgage. In interest alone, if your interest rate goes from 3% to 4%, that 1% difference would cost you about $300 a month, or in other words, $4,000 per year. So as far as keeping your interest rates low, it's all about timing. So a tip to take advantage of low interest rates is buy at the right time. Right now, interest rates are historically low. They probably can't go too much lower. So purchasing a home right now will enable you to take advantage of interest rates that are really, really low. There was a time when 5% was considered really low. Now a lot of people are in the high 2s or low 3s. So that 2% difference on a $500,000 home is almost $1,000 a month. So buying when interest rates are low are really important. The second thing to do is if you bought years ago and your interest rate's 4%, chances are you can refinance now, and if it's a $500,000 loan, you can save $400 or $500 a month by taking advantage of lower interest rates now. One last word of caution. A lot of people will say, I think home prices are going to drop in the future, and so I'm going to wait to buy. I don't have a crystal ball to predict home prices, but what I do know is if home prices do drop a little bit, but interest rates rise a little bit, technically, you may end up with the exact same house payment, and during that process of waiting, gambling that prices are going to come down without interest rates going up, prices may actually go up. And you're missing out on the interest rate tax deduction you get from making a house payment instead of a rent payment. Last, but certainly not least, the thing you have to be concerned with is inflation. So if you are renting a home and home prices are going up to match the raise in inflation, your dollar is going less and less and less each month. If you've wondered why rents have gone up dramatically over the last decade, part of it is because of availability, but part of it is because of inflation. One way to protect yourself from inflation is to buy assets. The number one asset any of us ever buy is a home. All of these things combined lead to one great point, which is now is a great time to buy a home. If you're thinking about buying, if you're thinking about upgrading, hit us up, 702-336-8500. Just shoot us a text and say, hey, I'm thinking about buying. And one of our agents will get to work to put you in the best position possible, not just to take advantage of great interest rates, but also to protect yourself from inflation by owning an asset instead of paying rent and paying for somebody else's asset. Have a great day.